Warm welcome to Nirmal Bang, ladies and gentlemen. I'm Hiral Datia. We have with us Jonathan Barat, CIO at Probus Financial Services, joining in. Jonathan, welcome to the show and a pleasure to speak to you and get insights from you. Jonathan, overall, last couple of days, we've seen major havoc that has been created with regards to the commodities market on the back of what's happening between Russia as well as Ukraine. What's your read?
Oh, look, it's been certainly very volatile, and I think the Ukraine-Russian situation has added to concerns we had about supply tightness that was actually caused by COVID. So at the end of the day, we've got a situation where we had concerns. It's been heightened by what's happening in the Ukraine.
Right. So overall, in terms of the kind of impact it could have, I mean, we've already seen the impact in terms of crude as well as a lot of other commodities as well. How bad could it be? And let's break it up into different commodities, starting, say, with crude.
Look, it is a concern, particularly for India that imports a lot of its crude oil. India and Japan, typically, it is a worry. Russia in itself sort of is a major supplier of crude oil and a major supplier of natural gas to the EU. As a result of that, we're seeing prices spike, obviously. We haven't quite reached the highs that we saw in 2008. So that's around that 148. But I think there are prospects for that to get to that level if, in fact, Russia decides to play hard, and particularly play hard in response to Biden or the US and the UK resolve last night to actually ban exports of crude to these two countries. So it is a heightened concern.
Right. And clearly, if you see in terms of the way crude has been moving, yes, as you mentioned, it would be a concern like countries like India from a price perspective as well, and directly an impact coming in from an economy perspective, because inflation is overall a concern across. So what is the kind of move you're expected to see in terms of crude from here on? Because it's not only the technical side of it, or it's not only the demand side of it. Supply is going to be one factor that comes into play from here on.
Yeah, no, very much so. When you look at the supply side, we'd already reached very close to capacity. So the extra crude oil that we could find normally from OPEC, we're not going to see as much as what we'd expect. So that supply becomes a real issue. Remember, we are consuming about 1 million barrels per day. So as a result of that, sort of when you have no spare capacity, prices can continue to climb. So yes, it is a concern. I have heard that some people think that it could possibly get to US $300 a barrel. I think that is way too expensive at the moment. But once again, I do think those highs will be tested at around that 140, 150. Now, remember, there's a lot of talk. There's a lot of news that comes to the market, and that's going to play a vital factor in what happens to the price. It could be anything that comes out. Russia might say something and we'll get a 10% swing in the price. Ukraine might say something, or US or the UK or even the EU, and that's going to cause that volatility. So expect a lot of volatility, but the bias at the moment is towards the top side.
Right. So are we saying $150 per barrel is something that's the maximum peak that we could see, or do you think there is a possibility of it going beyond $150 per barrel as well?
Look, there is a percentage that it could go a lot higher than 150, but that really depends on whether Russia decides to hold back its exports of oil and natural gas to the market. Remember, the Russia supplies, I think it's around about 8% of exports of oil to the global economy. And if you cut that off, that's going to be a concern because we don't have that spare capacity to be made up. And I think that's what Russia will play if pushed. And that is a concern because that'll see knee-jerk reaction in the markets and prices will break through that 150.
Right. And overall, Jonathan, that $100, $120, $150 per barrel absolutely does not seem sustainable for a lot of economies across, right? So do you think that taking the entire scenario in nature, the tussle could be transient in nature, and it could fall back to around $80 to $90 per barrel, because sustainability is going to be key as well.
Absolutely. That's a general economic argument that if prices remain high, then that'll slow down economies by themselves, slow down economies, and then demand won't be there. So therefore, prices will come back. In general economics, that's what should happen. The key is how that'll happen and to what effect is that going to affect other asset prices. So you tend to think that with higher prices, economies will slow. Those economies that require will slow down faster. And a result of that, we'll see global GDP come under pressure, and then oil prices should correct. I mean, we have to note that oil has been very volatile. It wasn't so long ago that we were trading down about, even negative, down to $30, $40 a barrel. But I do believe that it is heightened up these levels. Persuasion will really create that volatility, but I think generally the market's happy to supply and demand oil around that US $75 to $85 a barrel. So I think that's where the global economy is comfortable with it, but up at these levels, it's certainly a pinch.
Right. And overall, if you see in terms of natural gas as well, that is becoming a concern, because as we know, Russia is one of the key suppliers of natural gas to Western Europe. And given particularly the conflict, or rather the tensions are rising, natural gas prices have been on a spike as well. How do you see that? Because in the next month or two, winters will start settling in as well. So that becomes a concerning area, because politically as well, if you think there can't be oppositions made, what if Russia stops supplying natural gas to Western Europe? A lot of thought processes going on from that front.
Look, there are not just for Western Europe, but also to the global supply of a lot of the other commodities like fertilizer, which use natural gas a lot. So you've got this heightened concern that you don't see that supply of natural gas. Remember, Russia supplies about 40% of the global exports of natural gas. So if you do see a concern then, and remember we are playing at record highs, you will see a drastic slowdown in terms of the economies that require that natural gas. So it is a concern. You might even get a run, which has been similar to the nickel price, which we saw in one day was up 66%. So quite high, and because Russia owns, and of course Russia supplies the globe with a lot of natural gas, all they need to do to do anything or to create more fuss would be just to start to slow down and turn off that tap, which, mind you, they have done a few times over the last 6 months.
Right. So what's the kind of peak are you expecting in terms of natural gas?
Well, I think it's when you look at, we're already at record levels, with the European gas, and look, anything can happen with that volatility. And I do think that it's really up to how Russia behaves, in terms of the tap and the supply. If Russia does play hardball, anything could happen to that price. If she decides that just to limit it to test, but I don't see it's in her advantage to hold, Western Europe to ransom over that unless something major happens. Remember, Putin was on the phone to the French and the Germans just before he went into the Ukraine. So I think Russia in itself needs to sell it, Europe needs to consume it. So hoping that Russia will not play that card.
Now, moving away from crude and natural gas, how do you see silver and gold? Do you think that could be considered as a safe haven given the current scenario?
Oh, look, it's been a considerable play that we've looked at for quite some time. When you look at where prices are, about 2050 and 2650, you look at it, that could continue. Remember, we're going to expect very significant inflation as a result of what's happened to commodities and how they pass through the economies. So with that inflation, I think you'll see gold as a store of value, not just for its value against inflation, but also because of geopolitical concerns. If I looked at the two metals, I still think there's more in the top side, particularly silver, because silver hasn't been as strong as perhaps gold has. So when you look at it, inflation, geopolitical, flight to safe haven, gold and silver remain a good story. And the caveat there is unless something relaxing happens out of the Ukraine, which in the foreseeable future doesn't look possible.
Right. And Jonathan, coming to base metals as well, aluminium becomes key when it comes to Russia. Copper as well is something we need to consider. How are you seeing the base metal portfolio? Where are you seeing traction? And
Mm.
where is it where you're seeing that these could be complete avoids right now?
Look, the base metal complex, even prior to what's happened in the Ukraine, was in a steep backwardation in some of these metals. That already told us that there is in short supply of these metals just with cheap COVID dollars. Now, obviously, that's all changed. And correctly, as you put through, aluminium, nickel, palladium, all these, Russia provides 30% of palladium to the market. So when you look at this, once again, it's Russia holding the cards in terms of what will happen to those markets. But when you do look at the base metal complex, it is undersupplied to what is needed. And as a result of that, once again, any tweak that you'll find, you'll see these commodities trade significantly higher, as we saw with nickel, where we saw one-day movement of about 66%. So it is heightened, it is a concern. And I think when we do continue to see markets in backwardation, i.e. the forward months are lower than the front months, and that is not a normal market. And if you continue to see that and see it grow, then you'll know that base metals will continue to trade higher.
Right. So in terms of base metals as well, would it be right to say another 10 to 15% up move from here on is a fair possibility?
Oh, and more, depending. I mean, the key is there's very, even leading into this environment that we have with Russia and the Ukraine, we had no supply of copper, for instance. We had no supply of nickel. The inventories in warehouses were so low that this has just played really into the commodities' hands. So when you see these sorts of things, any form of geopolitical concern that would concern issues to the supply, we'll see prices going up. It could be not just 10%, it could be 30%, it could be 40%. But the fact is we don't have that supply of a lot of these base metals. And when you start to turn off the tap, when you start to have problems with supply and ports not being able to issue into the market, all these sorts of things, shipping, when you have that and you don't have that supply, people who need it will buy it. And as a result of that, you will see those significant gains.
Right. And very lastly, Jonathan, right now, if you have to give an investor 2 to 3 options as to best investment bets from the commodity space, what would that be?
Look, I think I would be looking at silver, continuing to look at silver as a top pick. That has underperformed the market for some time. It's had a good rally. And if you just have a look at that gold silver ratio, gold's on new highs, silver hasn't yet come close to it. So when you're looking at $25 an ounce, it could and should be trading around $30, $35, even $40 an ounce. So I think silver is something certainly to look at. When I look at the copper market, yes, it's still on a high, but there are still critical issues there. So I would tend to think that remains something that if you had in a portfolio, you should be putting in a portfolio. But another tip to save money is perhaps try to ease out of some of your equities, which are showing good profits, because that's going to certainly help you a little bit, in terms of maintaining good returns, and just wait for pullbacks in some of these commodities, and then they should continue to run to the top side.
Absolutely. Thank you, Jonathan, so much for joining us on the show and for giving us insights on those top bets we could be watching out for. Thank you. Stay safe and speak to you soon again.
Okay, take care. Bye-bye.
Subscribe to our YouTube channel for in-depth interviews of India Inc. and press the bell icon so that you do not miss our updates.